I think we could be in for a pretty big spike, especially in silver. Tuesday, May 14th, 2024, Monaco 64, home of alternative economics and contrarian views. Well, China has announced a fairly large borrowing spree, if you want to call it that. They announced yesterday, the government, that they're going to borrow a trillion yuan, which is the equivalent of $138 billion in long-term sovereign bonds. We're going to look at what that means, not just for China, but for the world, for commodities, for gold and silver. And talking about gold and silver, we're going to look at how the premium for silver at the Shanghai Futures Exchange is into double digits. The gold premium is not as high, but it's still relatively firm. And yeah, before we look at the Chinese news, just wanted to let you know that Miles Franklin still have their special for 1/10 of an ounce gold Canadian maple leaves. They're only $29 over melt, the 2024 coins. And they've got 1 ounce silver Krugerrands at $3.10 over spot, which actually happens to be similar to the premium between COMEX and the Shanghai Futures Exchange. But if you are interested, contact them at info@milesfranklin.com or call them on 1-800-822-8080 and mention Mario or Monaco 64. Of course, for my UK viewers, Gold Investments, they've got a couple of specials, and you can find out about that below in the description of this video. So back to China. A trillion yuan, or $138 billion. It sounds a lot, and it is a lot, of course. I've done some calculations. I took Chinese GDP as per the US debt clock. If you go onto world debt clock part, you click there, it's got the Chinese national debt. It's also got their gross domestic product, which according to this clock is $17.6 trillion. It might be wrong, I don't know, but I'll take that. And so this borrowing, just to give you some perspective, is 0.78% of GDP. And to give you even some more perspective, let's say you earned $100,000 a year. That would be the equivalent of you taking a $780 credit card loan or any other kind of loan. So it's not huge, but I think it will have a big impact, because this is probably going to go into the banking system, and it's going to help bank reserves in China, and they'll be able to lend on top of that. So it's going to have a multiplier effect. So I would say it's going to help commodities. It's going to help gold and silver. It probably will tick up the Chinese GDP by almost 1% or so. So that helps them. Am I praising China here for this? No. Borrowing, is that good? Well, it doesn't seem to be that much, about 0.78 of GDP, but you know, be as it may. Let's look at the article here that's come out on Economic Times of India. I think the story originally came out on Bloomberg, but they have a paywall. These people don't. So as you see, China's $138 billion stimulus dollars bond sale starts on Friday. So let's go through it. China's finance ministry plans to start raising a trillion yuan in long-awaited long-term special treasury bonds this week to raise funds it will use to stimulate key sectors of its flagging economy. The finance ministry confirmed what 4 sources had told Reuters earlier on Monday, that the 1 trillion yuan of special government bonds would have tenors of 20 to 50 years. And issuance will begin on May 17th. The sources who have direct knowledge of the plans said 300 billion yuan worth of 20-year bonds, 600 billion yuan worth of 30-year bonds, and 100 billion yuan worth of 50-year bonds would be issued. Interesting that they're issuing such long-term paper. There have been people that have criticized Janet Yellen for not having issued such long-term paper when rates were really low and saving on a lot of, let's say, interest expense. China's Premier Li Qiang on Monday urged officials to make good use of the ultra-long special treasury bonds to support the implementation of major national strategies as well as building security capabilities in key areas, state media reported. Yeah, I'm not sure what that means, security capabilities. It could be to do with military spending. So there you go. That's kind of interesting and not surprising with all the geopolitical saber rattling that is going on these days. China would make coordinated arrangements for key tasks for this year and the next few years, coordinate and make good use of conventional and extraordinary policies, state media said. The country would also better coordinate government investment in social capital, the report said, citing Li, who chaired the virtual meeting. Market participants have been waiting for weeks for details of the issuance pipeline of these special treasury bonds, which were first announced during China's parliamentary conference in March. Yeah, I'm not sure foreigners can buy these bonds, or maybe international banks or financial companies based in China with branches in China might be able to get these bonds, but I don't think you and I could, for example, try to buy some of these. Given the issuance was foreseen, news of the details caused bond yields to slip slightly. So it's kind of buy the rumor or sell the rumor, buy the fact. The yield on 30-year bonds fell 2 basis points to 2.55%. So just to give you an idea, the yield on the 30-year bond in the US is 4.63. So their cost of borrowing is substantially lower than the US Treasuries. The Finance Ministry said 30-year special bonds will be sold in 12 tranches from May 17th to November 15th. It said 20-year bonds will be sold in 7 tranches beginning May 24th, while 50-year bonds will be issued in 3 tranches from May 17th. Details of the timeline come after data showed new bank lending in China fell more than market participants expected in April from the previous month, while broad credit growth hit a new low. Just to finish, it says the rise of outstanding total social financing, a broad measure of credit and liquidity in the economy, slowed to 8.3% in April, a new low from 8.7% in March. Earlier in the day, the FT Financial Times reported that Chinese authorities had begun to sell the long-dated bonds, and the People's Bank of China had asked brokers for advice on pricing. So it looks like they're going to space it out from May until the end of the year. So it's not something that they're going to throw at the market in one go. So compared to what the US Treasury is doing, they've got bond auctions every week. It's a lot less, but I think it's targeted more towards growing the economy, not spending and sending, let's say, money to Ukraine and Taiwan and Israel. So, as I said, I think this will continue to help commodities. It doesn't sound like a lot, 138 billion, but once it flows through the banking system, it will be multiplied by fractional reserve. And with that, let's quickly look at the premium situation vis-a-vis gold and silver, and in relationship to COMEX or the LBMA, the Western London, New York price versus the Shanghai price. And if you are on X or Twitter, I recommend you follow this fellow here. He's a Chinese guy who follows precious metals very closely. His handle is @Oriental_Ghost. His name is Bai Xiaojun. He's got really good analysis of the precious metals market. And he hasn't got the data for today yet because I'm early today. You've noticed Rudy's not here because he's still asleep. And this is from yesterday. And the silver contract on the Shanghai Futures Exchange, as you can see, settled at 31.40, which is about 11% premium on the COMEX price, let's say, of around 28.20. We might be a little higher now, but yesterday that's where we were. The gold price settled at almost 2,400, so it's about a 1.5 to 2 premium. And why is this important? Well, because we started seeing these big premiums in gold and silver back at the back end of last year, sometime late November, December. And that's when we had a big spike in gold above 2,100. It didn't last that long, but I think we could be in for a pretty big spike, especially in silver. And yesterday was a strange day for gold and silver once the US markets opened. Gold was very weak, relatively weak, down 1% most of the day, while silver was actually unchanged to up, which I found really weird. Some of you, of course, might say, well, there's manipulation, but I don't know, maybe there was, but I think we should not get bogged down on manipulation that much. I know I've spoken about it, and there is, but there's really not much we can do. But you can bet it won't last forever. And I think one of the things that's going to destroy this ability of COMEX and the LBMA to keep manipulating the paper price is the heavy physical demand, not just from China, but also from the rest of the world, as countries try to diversify away from fiat currency, i.e. the dollar, into real money. And when these countries buy gold, they don't buy futures, they buy physical. And I think that's why I wouldn't worry too much about the manipulation. I think they're gonna have a tougher time doing it going forward. So let's quickly look at where the markets are then this morning. And I said I was early, so it's 7:08 a.m. London time. Yes, we've got something to do this morning that's important, so we had to get up early. We've got spot gold, 23.45. It's up about $9. High's been 46. The low's been 34. So we're up about 1/3%. Still down on the week from the close on Friday of 23.60. But silver has continued going higher. We're up 22 cents at 28.40. Almost up 1%. The high's been 51 and the low has been 28.15. So silver performing fairly well. The Dow futures is up 9. The NASDAQ 100 is down 13. The S&P futures unchanged. The currencies, we've got the dollar continue to rise here versus the yen. It's up 0.2 above 156 now. The rest of the currencies are pretty much unchanged, actually. WTI crude is up about 1/3, just below 79. Brent as well, up 1/3, around 83.23. And we're seeing copper continue to go up, and that's got a lot to do, I think, with what China's doing vis-a-vis trying to boost their economy. And some people think it will boost GDP by about 1%. I might have said that already. But high-grade copper is at almost 480, up 0.75%. And yes, tomorrow we've got CPI. And we need to keep an eye, of course, also on U.S. Treasury yields. Well, the 10-year yield is unchanged, just below 4.5%. So, yeah, that's it for today. And with that, I'm going to wish you all a very good day. Take care. Bye.